Welcome to the Female VC Lab podcast. I am here with Xiao Jean. And in one line, give me your name, your title, and the name of your fund.
All right. So I'm Xiao Jean Chen. I go by my initials XJ. And yes, and I'm an angel investor since 2016. And I have founded and currently run a venture investment platform. We're also a venture capital firm.
Wonderful. So what inspired you to become an investor or a venture capitalist?
So in 2016, I was really enamored in the blockchain technology and the promise that to democratize financial institutions. And that was very alluring technology overall. And so my investment thesis is, now I'm a female founder, I am 100% on investing in female founders.
Okay, that's great.
So that's...
Is that what inspired you to become a VC, help the overlooked and untapped female founders?
Absolutely, absolutely. So as a female founder, when I was raising funds, I had personal experience with the bias in the industry. So it took me double the time to raise a quarter of the average seed round. So on average, it would take founders about 40 meetings with investors to close a seed round of, on average, of 2 million. Mm-hmm. And so we were in, and my startup, we were in a couple of accelerators, and I was always the only female founder.
Wow.
In the programs, I know that our technology, our product market fit was not inferior, but we were always the last one to secure funding. Wow. in the cohort. So it became a personal mission to help fellow female founders raise.
Oh, that's wonderful. Clearly, that's a little bit of the motivation behind your thesis. But what is your thesis exactly? What is your investment thesis for your fund?
So I think, in my opinion, I think this gender injustice in venture capital is the biggest problem of humankind. It is the biggest hindrance to betterment as a species, because like we talked about before, diverse founders, builders make better products and services. And it's not just femtech, it's not just female women make better products for women, but women make better products overall. Mm-hmm. And we know this by, for example, by studies that as an investor, investing in women is just better business, because if from 2019 to 2020, PitchBook has reported the number of female-led exits went up 16%. Right. The number of male-led exits dropped 2%. Now, the value, as an investor, we care about our returns.
Correct.
The value of female-led exits went up 30% from 2019 to 2020. In the meantime, the value of male-led exits dropped 44%. So investment in women is just better business.
Those are some amazing statistics, XJ. Those are amazing statistics. I'm glad you pointed that out, because I think sometimes those quantifiable numbers are very powerful, and everybody doesn't always have PitchBook or some of these other Prequins or some of these other great reporting tools that have that wonderful information in it. So thanks for pointing that out. I think that's a very critical piece of information.
So as an investor, we often hear data-driven investment decisions,
correct,
value-driven investment decisions.
Yes.
And this, there you go.
You have it.
Right? It's a no-brainer.
It's a no-brainer. Outside of PitchBook reports, what are you currently learning or listening to or reading these days?
I've been perusing the latest research on neuroscience. So I've been experimenting with binaural beats.
Yeah, those are great. The binaural beats are so great. If you
Yeah.
really understand what that is, I use those absolutely.
Yeah.
They're great. The
Yeah.
frequency, and it's the frequency and sound, and how does it resonate? Because some of the binaural beats don't work for me, and I'm like, I can't play this one, but other ones play. But it all has to do with the frequency and sound, and then how does your body resonate with that? It's
absolutely. So I've also been doing this one-person experiment. I've been experimenting with different waves, different frequencies, hoping to instigate alpha. I'd say we really want to get to the alpha waves. And as a supplement, this is not to replace my regular meditation or yoga practices, but it's a great supplement. So I'd be like doing emails and I'd be playing pure binaural beat. And
that's how I use it as well. As in the background is music, or if I'm feeling a little like I need to get re-energized, I'll kind of put it on. Or I have other ones that I do that I'll put on that gives you energy. You kind of gotta. It's weird because it is kind of personalized, which is very strange. But there's a lot of good music like that on YouTube.
Yeah. Absolutely. And I find it helps with my sleep as well. It increases deeper sleep. So I've been a big fan of binaural beats. And I've also been, what I'm listening to other stuff is I've been relearning to play the piano.
That's great.
I used to play as a kid, but then turned more into sports. And now I find it very effective in stress management.
Yeah, that's another calming. Music can be very calming, or very energizing, or music has emotion. Music can carry many emotions. So, piano could be very exciting. It could be sad. It could be happy. It could be multiple things.
Yeah.
That's awesome. All right. Yeah. So here it comes. XJ, the bonus question. In 2 years, when we're talking again, but hopefully we're talking before then, how do you see investing or venture capital changing or evolving?
I am observing a hybrid, more and more institutional investors taking on a hybrid approach and making their investment decisions. When I say hybrid, well, venture capital, the asset since its inception in the 40s, has not really had any innovation. Our process, screening, due diligence is manual and cumbersome. And I'm observing more and more investors taking a data-driven approach. For example, we have developed and launched a machine learning algorithm that predicts investment risk.
Wow,
and we're not the only ones. And so this is more what I'm talking about, the digitization of VC. Where use analysts to inform final investment decisions,
right,
but also take into account evaluation and data. And this is very helpful in eradicating the bias in the industry.
Yes. And then from what else you just said, if you're using kind of machine learning AI, like your scalability is greater. Most people don't think about how would I scale to become like an Andreessen Horowitz, if that's what you wanted to be. How would you do that if you have to hire 1,000 analysts? Like it doesn't make sense. So how do you do this at scale and still keep yourself lean without having to raise, $1 billion, $2 billion, $5 billion fund and have all these hundreds of, thousands of analysts? That kind of makes no sense. Because also, if you think about the data, we talked a little bit about PitchBook, but there's Preqin, there's Crunchbase, there's all these different access to data. How do you integrate that, to aggregate that, make it all in one place? And a person doesn't need to go through all that. A computer can do it. So I think 100% agree with you that the data, if you really want to be data driven or more data decision made, then have the AI do a lot of it. It's not going to do all of it. And then maybe it surfaces some things, maybe it notices some things, right? Hey, we haven't done this, like invested in this kind of thing for a while. Why? Then you can ask why. You can ask, then the person asks why. But I mean, from a scaling side, that makes perfect sense.
Absolutely. And to add on to that, it would take, the most important figure in venture investing would arguably be the valuation. Now, it would take an analyst about a week, I'd say, to come up with a valuation range. But it only takes our valuation calculator to spit out 3 different valuation from 3 different valuation methods in 3 seconds.
Like I said, from a scaling side, you've created, like, that's a massive velocity, like a speed up, like the speed up of that. So look at how many more companies you could look at as well. You know what I'm saying? It's the things that you're missing is because you're spending a lot of manual time doing some of these things, and maybe spitting out that in 3 seconds. Clearly, you can multiply that across multiple companies. Let's say you were evaluating 100 or 200 or even 500 companies a month. Really, the time save on that is like massive.
Absolutely. So the top of the funnel, we'd be able to massively enlarge it so we can consider more deals.
Absolutely, more deals, and you can make better decisions on deals. And then the other thing you'll have is you have a good cross section of different types of, I don't know what all the data you're collecting, but you could find out, are there really, what's really the disparity of diverse people and what's really the disparity of women, because you have all these other great statistics. So why does it take 80 meetings and you only get half the money, $1 million, right? Why is that? You can start looking at these other problems.
Yeah. So we still focus on quantitative data. So they're mostly financials, but we also focus on the team, which is more 100%. Qualitative data. And this is actually I'd say the future, where the future is, where we can turn unstructured qualitative data, for example, team due diligence. We turn that into structured data where we can compare teams, for example.
That could be powerful.
Yes.
That could be very powerful, because you're right. You're going to do some qualitative analysis because in the end, you're investing in people, right?
Yes.
So you have to look at the team, how they gel, how they execute. There's just some things the data's not going to tell you. Right.
Yes.
But some other things data can inform you of. So, I agree. It'll be a balance.
Yeah. So right now we're already using data about the team, for example. Are they domain experts? How long have the co-founders been together?
Things of that nature. Yep. Mm-hmm.
Yeah.
How do they execute? That's a little bit hard. That's a quantitative measure, but it's a little bit harder.
Yeah.
It's harder.
Yeah.
But like you said, you're going to write that into some type of something and try and pull some information out of there.
Exactly. Mm-hmm. We're also keeping a very close eye on the latest entrepreneurship research. So, for example, what characteristics are common to the most successful founders, and what kind of outliers? The college dropouts.
Both sides, right? You got the super mega outlier here. You got the super mega outlier here. So
and this, for the machine right now, the machine can't read this, but this is what not yet, and this is where. Exactly. This is where our R&D is heading towards.
Yeah, you know what? What's interesting, though, I like how you brought this up. I think it's powerful for a fund to have its own IP. I think it's important to have that, because what other value do you have outside of just being able to find things? Picking is one, selecting is one, but then also having this breadth of kind of IP that you're creating to kind of automate things and help things along. I think that's very powerful.
And I think it also opens up the industry to more diverse people, female VCs, female associates, people of color VCs and associates. And I say this because we know that less than 3% of women VCs are founding partners. And founding partners hold the biggest check writing power.
Yeah. That's true.
So most decision makers in venture capital are men, white men. And this, again, in my opinion, is the biggest problem we have. And by turning this know-how, this secret magic sauce into an IP where I'm really looking forward to democratizing the industry.
Yeah, sounds great. So how do people contact you?
LinkedIn would be the best, but also if you go on our website, you email me, and then we're also on Twitter. I'm also on Twitter. These are all channels to reach me.
Wonderful. Thank you so much, XJ from VenturePole, for being our guest.
Real pleasure,
on
Barbara.
the Female VC Lab podcast.
Thank you, Barbara.
Thank you so much.